Hey guys, welcome back. In today's video, we are talking about the end game squeeze, the gamma ramp fuel, how the shorts have fallen, and many more in this video. First, we're taking a look at this from Adam Aaron. Ending the second quarter on a bang, not a whimper. The domestic box office will be up by around 20% versus the same weekend last year. The quarter should end at $3 billion industry-wide, perhaps a hair under or over. Clearly, the highest Q2 industry numbers since 2019. Cumulatively, January 1st to June 30th, the domestic box office will be up around $600 million year over year. With a strong July ahead of us, that numbers will grow even more soon. So firstly, this is exactly what we have been saying. How well the box office is doing. You guys would have heard it a million times from me by now, but every single day, we are just getting confirmation that the numbers are getting bigger and at some point growing faster than what even we were originally expecting. We knew it was going to beat expectations, but it has actually beat the expectations of expectations. And so you can see just how well we are doing. And Adam Aaron has been extremely excited and vocal about the box office, obviously talking about how well we've done so far for Q1 and Q2, but more importantly, what we should be looking out for Q3 and Q4. I definitely think he's dropping a lot of hint in terms of how Q3 numbers are going to do extremely well because of how we are seeing the box office get even bigger. And remember, he has been preparing AMC for this exact moment. All of the previous investments that were made but were laughed at are all coming to fruition now. All the investments, whether it's in premium screens, whether it's in ultrasound systems, they're all coming to hand right now. They're all attracting the audiences, which is going to do massive numbers for AMC. Now, one of the speculations for this is from what he talks about with under or over, again, 100% speculation and it's for fun, is talking about the AMC kohrs loading up, where we're seeing volume ramping in. Now, this is something that we've seen in the past before. We know that Adam Aaron has definitely dropped hints all over the places. And one of the biggest hints he dropped to us recently was him buying into shares of AMC, because we have seen how well AMC has performed after he did that. Now, when we take a look at what's going on now and what could be going on, especially with how well fundamentally AMC is doing, how strong we're looking into the future, there definitely looks like there is going to be some sort of volume happening, some sort of volatility. And whether that's the gamma ramp fuel that he's trying to obviously hint, it's obviously still up in the air, but it does feel like that he is waiting for something to happen for AMC. Now, according to the latest Fintel filings, institutional investors increased their long AMC holdings to 240 million shares, up 36.7 million shares, so 18% from the previous quarter. So whilst headlines focus on fear, institutions are adding shares. Watch what the money is doing, not just what's being said. Now, one of the things that we have always constantly shown is the negative articles on AMC. Now, there's a very clear reason for why we do this. It's because it shows a contrast to what actually is happening for AMC. For those of you who've been on this channel for a long time, you'll see that I've shown you guys countless articles of how you should sell your AMC, of people saying that AMC is going to go to bankruptcy, of people saying to stay away from AMC. We have seen countless articles that are using or similar narratives from what we've just said. Now, the thing about this, the contrast that we always try to show is that whilst these articles are increasing in how much is being released, the very opposite is happening. People are telling you to sell AMC, whereas the institutions are buying into AMC themselves. And just like we talked about here, whilst the headlines focus on fear, institutions are adding shares. And we've only ever seen them add shares. If you take a look at the institutional ownership for the last few quarters, you will see a constant increase in accumulation of AMC shares. And we are seeing very, very little selling. And so this is how we know that they've realized opportunities and that they want to buy AMC, but they don't want retail to hold it all up. And now it's not just, of course, the institutions, because retail obviously doing the same. Testimonies of where AMC is heading are coming thicker and faster every day now. I expect more investors to join in as the rumor spreads, further amplifying AMC. So we are seeing how investors from everywhere are, of course, buying into AMC. We are seeing how they realized opportunities. And this isn't just the US. One of the things we've talked about the most as well is that in the European markets, we are constantly seeing new apes who are accumulating. Whether it's the apes that have accumulated in the past and is still accumulating, or whether it's just new apes who have found AMC are buying, we're seeing a lot of this happen for AMC. And a big thing for this is realizing that in the European market, every time you see that the US stock market stops trading, but the European market is still trading, you would see AMC go into the positive. And there's a very clear reason for that. Is that just the general outlook for AMC is that it's bullish. Also, the investors that are, of course, in the European region and just anywhere pretty much outside the US are all bullish. And that's whether it be retail or institutions. And so it's why you see that on days where NYSE is closed, where the American stock market is closed, you're seeing AMC having green days in the European markets, in any market outside the US, is because that's where it should be heading. Where there are less manipulation, AMC is showing its true colors, which is the fact that it's bullish. And so we are seeing right now how just these guys are buying into AMC. Now, one of the things that they fear right now is that because of people constantly buying, because apes are constantly accumulating, and more importantly, no one is selling, we've been seeing how AMC is having bullish movement. So today, what we saw was that AMC was up 7.41% in night trading at 232. Now, it was very, very low volume trading, but nevertheless, we were seeing AMC go up. And a big thing for that was that now that we see AMC go up overnight trading, you suddenly see the dark pool once again go crazy for AMC. Now, this is very significant because today AMC is down 5%. And now we're also seeing the off exchange once again above 60% and just trumping that NYSE, that actual lit exchange. Now, the reason why we're talking about this is because last week on the Friday, when we saw AMC go up 14% in one day, it was because there was more lit exchange volume than there was off exchange volume. And so the institutions realized that they can't keep getting away with this, that they've realized that they can't actually allow AMC to see lit exchange, or at least very, very often. And so we're back to this kind of usual tactics that are used by the short sellers. But it goes on to say that we've seen the truth. That very glimpse of more lit exchange than off exchange on the Friday already showed us what the consensus on AMC is, on what the mass, wherever it's retail, wherever it's the institutions, the majority of money is going into buying AMC. And we've seen that from the lit exchange. And you can see the dominoes have fallen and the shorts have long known they get liquidated. And it's just very clear on what's happened here, on what we have to look at. It's because of what we have seen with the liquidity issues. It's because we've seen the margin clearing that's been ongoing right now. And that's why we've been seeing AMC having this ramp up in movement. And kind of the end game, especially with the firms that are involved, and you can see from Stephen here talks about the AMC end game, I believe, will be Pentwater and Discovery together, defeating UBS in their short position in AMC maintained offshore, possibly in joint force with others going long. Now, I think a very interesting part about this is essentially is that we know that there are very few institutions who are so trapped in AMC, who have synthetic positions of up to the billions that are stuck in AMC. Now, some of this could be UBS, could be Citadel, and could be other firms as well. So we know that there are firms who are involved with that. Now, with these institutions like Pentwater and Discovery, we've seen the history. We've seen how they've obviously triggered a squeeze in the past before. And so with this being AMC, and with knowing that there are so many firms who are stuck with AMC shorts, and that there are a few firms who are stuck with massive shorts, we realize is that there is a massive opportunity. And so it could be looking like that they want to trigger this squeeze. And again, the incentive is there, because when you take a look at how many shares they own or how many shares they have been trying to buy, and just the recent increase, it talks about how much benefit is actually at stake for them and why they want to do this. Now, kind of going back to the box office, and again, just like Adam Aaron has said, We are seeing how AMC is still very likely to go to $3 billion. We were at 2.9. A very important thing about this is that when the box office is going up, it's obviously very good, but there's a big reason for why I focus on it. It's because who is benefiting the most from the box office going up? It's AMC. When we take a look at the top 10 Supergirl locations, you can see 9 out of the top 10, and in fact, just the top 9, you could even say, is AMC theaters. So when we talk about who's getting the most market share, when we talk about what company is attracting the most audience to go to their theaters to watch, it's AMC. And so when we take a look at why the box office number going up is important, it's because the majority of that number is going towards AMC. We are benefiting from this. And you can see is why when people talk about how AMC focusing on fundamental is dumb, it's because they don't realize what's going on. Are you Shield's debts? Of course, AMC taking a high interest debt to buy out Odeon and expand all of Europe will not improve the bottom line at first, but eventually would. So one of the things that we've seen people is obviously talking about the debt, is obviously talking about the AMC operations. But the biggest thing to realize right now is that we are the #1 company within the industry. We've done everything we can to make the self better. And every decisions that we are doing right now, and this is something we talked about in the past, is that whilst it may not have a major effect short term, it definitely has a major effect long term. And a lot of the things that we're seeing AMC say right now, and a lot of the things wherever you're looking at these AMC record audiences, record attendances, it's not just because AMC suddenly made a decision last month and it allowed us to get the record attendance this month. It's because AMC in the last 3 years have been doing this exact thing to capitalize on when the opportunity comes. And so we have to understand where AMC is going. And when you take a look at how we are comparing ourselves to our competitors and just how undervalued we are, we have to realize is that they can't keep AMC lower for any longer. And you can see a big example of this is that Cinemark only has theaters only in South America and only 205 theaters. AMC has 370 international theaters across the world, including UK, Spain, Italy, Germany, and of course the European market. So when you look at that box office revenue, majority of that revenue is being shared with AMC, and this is the biggest part I keep on talking about. We are the one that are benefiting the most from AMC. We are the ones benefiting the most from the box office, and AMC is that company. And so imagine finishing above 2.95 billion to end Q2 2026, combined with all of the others sold out. And this is how we know that AMC is doing well. Not only are we getting the ticket prices, not only are we getting what we've said with how more and more audience are coming, but it's also coming and reflecting in the food and beverages. When you take a look at the 2019 and you see what they was doing from food and beverages, and you look at their gross margin, and we talk about what AMC is going to be doing now and how we're even more efficient now. Again, more things have been implemented, more efficiency has been created for AMC. We're only going to be looking at the numbers get bigger. And so the fact that AMC has been raising cash to, of course, pay off debt, to invest into the infrastructure, these are all very good things, because like I've said, I don't care the fact that they've added in 100 million shares. If you're here for the AMC squeeze and you know that there are billions of synthetics that have been created, 100 million shares isn't going to get them out of the hole they've dug for themselves. And just like we've seen right now, we're going to be seeing more FOMO happening. You can see the box office is roaring. People realize where AMC is right now. People realize the opportunity that AMC has, the potential that AMC has, and they all want to get in. And we're seeing the limitations as Charles Schwab is not allowing buyers on AMC for 5 days. And the only reason they would do this is because they've realized the volatility that's about to happen. And when you take a look at the technicals, and we've all talked about this, and again, we'll quickly go through this, is that the technicals is doing very well. We're holding on to very, very important structural levels. We're seeing how the bullish indications are still there. You can see even when we had that pullback, we were still holding on structure. We were still above moving averages. And so that's only going to continue. And just like how GME took off from 240 to end up above 480, we're going to be seeing AMC do do the same. Now, speaking of GME, this week we already have very, very important things. Again, more of a detailed presentation of the strategic and operation plan for the potential merge. And so this is something that's very, very big. And along with that, GME is at 9.76 billion market cap with roughly 4 billion net cash. So when we're talking about another case of undervaluation, this is what we're looking at. As always, that is Financial Advice, and I'll catch you guys next time.